No, and then the other thing that most people don't even talk about, if you're getting a big refund, if you're getting 4,000 plus every year in refund, you are essentially giving the IRS that money for free because they're not going to pay you any interest. You could literally put that account or that money in a high yield savings account that's generating at least 3%. The IRS ain't going to pay you 3% for holding that money that whole year. So you're also doing yourself a disservice by letting them hold it instead of paying yourself more every paycheck. The following is for informational purposes only and is not financial advice. Please consult a professional before making any financial decisions. For your reference, our full disclaimer will be displayed at the end of the episode. Welcome back to the Building Wealth from Scratch podcast. I am your host, Jerry, alongside my beautiful wife, Bianca. And today's topic is tax planning.
Yay.
So we're going to focus more on small business owners and high income earners. So those earning about $150K a year. But before we dive into it, we have a couple of announcements.
Yeah. So I think the most exciting one is that we launched a successful webinar and we are onboarded 6 new clients this month, and which is very exciting because we are transforming their lives, their financial lives, and their personal lives that ultimately impacts everything for them. And so I think that's the big why of why we built this company. What keeps us going is these family stories, and which hint, our next episode we'll be talking about our biggest client success stories and just sharing these amazing transformations that we do within 90 days. The next thing that I also wanted to share is that I'm going back to school. I made the decision to start my Master's of Accountancy program at SDSU.
Go Aztecs.
Yeah, we all Aztec geared my next episode. So I'm really excited to go into the program full time. I'm a little scared, to be fully transparent, because I haven't done school like that in a long time, but I'm excited for the journey. I'm also studying for my CPA exams. There's 4 exams, and the first one I am taking in October. So stay tuned for those results. And I think the next big announcement is
before we move on, give yourself some grace. You're going to do great. And I guarantee you our listeners are going to show their support in the comments, right?
Yeah. So I'm excited. Definitely. It's a good excitement. I think it's a good sign that I'm scared and I'm nervous, but I'm excited at the same time. So
love it.
All good signs, I think. And then the next announcement, you want to go ahead and
So
share?
We're actually going to go on a podcast tour. So the goal is to connect and network with other podcasters and see how we can support each other. So if you have any favorites that you feel we would be a good fit for them and vice versa, to jump on their podcast and them to jump on ours, please put them in, tag them in the comments or send us a message on Instagram or LinkedIn or through our website.
Yeah, that's really the opportunity where we get to share our story, get to share the amazing things that we're up to, and get to transform other people's lives. And we're just really excited to get out there. We're a lot more comfortable now podcasting. I think in the beginning it was a little nerve-wracking, and
for sure
now we're definitely making a lot more improvements. So today's topic I'm very excited about, but I think to start us off, what is tax planning?
And I think most people don't really understand what that means because they've never really had a tax planning meeting with anyone before. And really what that means as a wealth, advisor and financial planner, my goal is to talk to your CPA or your tax preparer. That's what tax planning is all about. Because if we're not talking to each other about your situation, how we can put our brains together to find you the best strategy to save on taxes, we're not doing our job. So I think before we dive into any of the details, that's the number one thing that has to happen, is that your advisor and your tax preparer have to be talking about your situation together.
Right. And I think that's the biggest aha moment I had working in wealth management is that, your financial advisor and your tax preparer should be talking to each other, your CPA.
Mm-hmm.
And that's really where you're going to minimize your tax liability and planning ahead. I think the biggest thing that I also took away is that it's not in April that they're stressing out. I think I'm remembering my dad, like always in like March, taxes are due.
Yeah.
Like it's time to like finally sit down with my accountant
And do the books.
and do the books.
That's the other thing, especially for small business owners, is you can't wait till March to do your books. You got to do that at least quarterly.
Right. And so I think it was like seeing like, oh, these people plan ahead. Like they sit down in September. And can you emphasize the importance of sitting down in September? Like why is that a key month?
Yeah, because the reality is a lot of, deductions and credits that you can get have to happen during the year. So a good example is your 401k. If you are a small business owner and you have a few employees and you have a 401k, for the most part, if depending on how it's structured, we're not going to get into the weeds, but generally you can only contribute to that 401k by December 31st. So anything past that, you can't do anything and you can't reduce your tax liability.
So that's why it's very key to start planning everything in September.
Yes.
So that you know exactly how much you're going to owe in taxes by December, if not earlier than that.
Exactly. And that's the other thing, especially if you're not a business owner, but you make good money. The other thing is knowing how much your tax bill is going to be, depending on how much you withheld, your credits that you're possibly going to use that year. And that way, so that way, if we have to liquidate certain assets or you got to start saving a few extra dollars a month, now we know so that come April, it's not a surprise.
Right. And I think that's the biggest benefit is that you're really planning ahead. And that's why hence the name tax planning.
Yeah. No. And then the other thing that most people don't even talk about, if you're getting a big refund, if you're getting $4,000 plus every year in refund, you are essentially giving the IRS that money for free because they're not going to pay you any interest. You could literally put that account or that money in a high yield savings account that's generating at least 3%. The IRS ain't going to pay you 3%. For holding that money that whole year. So you're also doing yourself a disservice by letting them hold it instead of paying yourself more every paycheck.
And what's the flip side of that? Because I think I remember like when we started doing tax planning with our financial planner, I was like, why are we paying the IRS at all? Like we should just use more of our money, invest it, and then pay them in April. At the
end of the year.
Yeah. And then what I ended up finding out is that you get penalized when you're underpaying the IRS. So they really have this thing figured out.
Oh, yeah. No, it's a one-way street for sure. And they're the only winners at the end. So if you're not being proactive, if you're not using the system to your advantage, you're going to get taken advantage of. Plain and simple.
Yeah, plain and simple. So that's why our conversation today is so important and really excited for you to kick us off on what is, why is it important to do tax planning? But before we dive into that further, we do have only 3 spots available to work with us in September. So if you're someone who's like, I'm tired of paying all these taxes and not knowing what my tax bill is going to look like in April, I want to be productive. I want to save on taxes. I want to feel good when I am making my money work for me. Definitely book an introductory call because we only have limited spots to work with us.
So first, we're going to start with the BBB. So obviously, for those of you who don't know, it just passes July 4th, and it's changed some things. Some things are going to take effect 2026, but some things have already taken effect starting now. And the big one that is definitely going to affect most people is the standard deduction. So the standard deduction has now gone up for both single, head of household, and married filing jointly. Obviously, I'm not going to go into the numbers, but just so you know, and if you are usually always just taking a standard deduction, that's going to affect you this year in a good way, because now that's going to remove more of your taxable income, so you pay less in federal taxes. The other thing is the SALT increase, so state and local tax. Before, the exemption was, or the Yeah, the write-off was 10,000. Now it's bumped up to more than that. Obviously, it's going to sunset in 2029. But between now and 2029, you can deduct way more from your property taxes that you normally couldn't before. Especially here in California, that's a big deal because property taxes is probably one of the biggest expenses you have as a homeowner. Obviously, the no tax on tips, that's just going to be more for a deduction. And obviously, there's certain caveats to that, but I'm not going to get into it. The other one is the auto loan interest deduction. So as long as you buy an American-made car, you can now deduct the interest that you pay on that auto loan. One of my favorites is the changes to the 529 accounts. Before, you can only pay for kindergarten through 12th grade tuition. Now they've expanded that you can also pay for books and other equipment for K through 12 along with the tuition. And if you're homeschooling, you can also use the 529 for that. So obviously there's a lot of changes. Those are just wave tops. If you want to learn more, you can obviously reach out. I don't know. I was going to say, go read the book. Go read that 1,000-page, document, but no.
No, you should go definitely read the whole BBB. No, I'm just kidding.
Yeah, okay.
No, definitely reach out to Jerry if you have any additional questions, because this is our world. So, this is our career. So this is something that Jerry stays very on top of, and he's definitely excited to learn how to really take advantage of the tax system, right? Not the other way around. Yeah. So I think a lot of us with tax planning, we feel like it's a very new concept, but once you're in the experience and you're actually making your money work for you, it's really beneficial. And you're like, wow, like look how much progress I'm making by actually planning ahead. And now there's certain dreams that can actually come true, like sending my kid to college, retiring early, going on, I don't know, this big bucket list trip that I've been wanting to do. And so I think that's at the end of the day, like without getting into the technicality of tax laws, which can be the boring stuff, but what's the fun stuff is when you actually get to execute on these big dreams and goals because you're planning ahead.
And I think that's what it's all about. So again, all these strategies are great, but obviously September is the best time to implement them because we have enough runway to make these changes and to implement them in time so that we can actually save some taxes.
Here's the deal. Waiting until April is really getting stuck with what the IRS says is how much you're going to owe. Like by that point, it's too late. So this is why now is the biggest opportunity to really sit down and be proactive and actually plan ahead, especially if you are that small business owner that is really starting to wants to understand, like, how can I really make this pay less in taxes? If you're that high income earner, because at the end of the day, like if you're a high income earner, a small business owner, you know how to work hard. Now let's make your money work hard for you. With that, we'll close out today's podcast episode. Thank you so much for joining us. Make sure to like and subscribe to our show so you never miss an episode. And we hope to see you next time. Bye.
Bye. Confianza Wealth Management is a registered investment advisor in the state of California. Advisory services are only offered to clients or prospective clients where Confianza Wealth Management and its representatives are properly registered or exempt from registration. This video is for informational purposes only and does not constitute individualized advice or a guarantee that you will achieve a desired result. You should consult with an appropriate tax and/or financial advisor for advice specific to your situation. All expressions of opinion reflect the judgment of the host/interviewee on the date of the program and are subject to change. Presented is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Discussions should not be construed as an offer to buy or sell or a solicitation of an offer to buy or sell the investments mentioned. A professional advisor should be consulted before implementing any of the strategies discussed. Investments involve varying degrees of risk, and there can be no assurance that any specific investment or strategy will be suitable or profitable for a client's portfolio. All investment strategies can result in profit or loss.